I want to unpack some of that stuff because it's kind of interesting. Like, I want to talk about some things that are happening in the economy.
Mm-hmm.
I want to talk about multifamily. Obviously, we got to get into the weeds of multi. My dad even sent me the article today about the big foreclosure.
$400 million. Is that what it was? They got defaulted
in Houston. Is that what you're talking
Yeah.
about?
He sent me that article, and I
200 million.
200 million. It probably is close to 400.
I read this morning it's $1 trillion in commercial loans are set to have to be refinanced in the next 24 months.
Yep.
So $1 trillion.
Houston apartment owner loses 3,200 units to foreclosure as multifamily feels the heat.
Yep.
Wall Street Journal.
To Arbor Group. That happened last week. Yeah.
Now, for people that are in single family, Veena,
yes.
I don't think they truly understand what the hell that means because we're thinking like, okay, well, if your tenants are paying, why would all of the sudden, if you have 3,200 doors, why would you go into foreclosure if you have paying tenants? What has changed between 6 months ago and today is not his tenants paying or not. What has changed?
It's interest rates. Interest rates have just shot up and people don't have rate cap insurance. And because 2 years ago, 3 years ago, no one thought interest rates were ever going up except for you when you were speaking about it last year. And you were like, interest rates are going to be 8%. And I was like, Cody, you're crazy. What are you talking about? But that's exactly what happened. Debt doubled and they have adjustable rate mortgages.
Okay, so they have secured mortgages. They put 3,200 people in these properties.
Yep.
They're all paying rents.
Yep.
And then the interest rates shoot up on the existing debts.
Doubled.
Now they're not cash flowing. They're hemorrhaging money.
Yep.
They go, F this, and they're letting these properties go.
They just can't service the debt.
So do you agree with this? The sub-headline is building values are falling. So their values are going down. Interest rates are rising and rent growth is slowing.
Yeah.
All three things combined,
because
putting some people in a pickle.
Building values are based off of cap rates, right? And there is about like a 60 or 70% correlation to interest rates increasing to cap rate expansion. So yes, building values are falling because cap rates are going up. They're inverse, right? And so what is going to end up happening is over time, they're going to really restabilize and debt is probably going to start either plateauing or coming back down. So it will come back to normal. This is cyclical. All real estate is. It's always been.
But what is normal, right? Because a lot of people think that like the last couple of years was normal.
No.
3%, 2% interest rates. I've got so many 2 and 3% sub 2 deals over the last couple of years. It's ridiculous.
Yeah.
Like I went to 4 properties yesterday. All of the properties were under 3%. Yet in multifamily, when you say go back to normal, what does go back to normal mean?
I think
6%.
Yeah, I think like 5-6% we can make deals work. Right now, we're starting to kind of see interest rates kind of coming back down slightly, not a whole lot. Nothing I'm holding my breath over because I'm sure the Fed's going to increase the rate again.
It's got to happen.
Yeah, they're going to increase the rate again. So I think it's maybe like even short-term pressure again. But I think as we've had a lot of real estate tourists come into the space recently, right?
Real estate. What is a real estate tourist?
Like there are the people that are like, oh, I have this other thing I do, and I do this on the side for like 10 hours a week. It's like a full-time job. I spend 100 hours a week doing only multifamily. And so the people that kind of are just like casually in the space are going to be the ones that are going to kind of step out of the space now and we can continue operating.
So what's the play?
I actually think the play is creative finance right now.
That's been the play, but like what's the new play?
But that is a play on multifamily assets, and that doesn't happen very often on large assets. You just bought a deal last year that was a big multifamily.
Yeah, 256 units, Illinois, $20 million, all seller finance, no money out of my pocket.
Let's talk about that because I think it's really interesting. A lot of people don't know this, that 34% of all single family homes and condominiums in the United States are owned free and clear. I wonder how many multifamily properties are owned free and clear, like smaller multifamily.
Smaller ones probably way more. Larger
like
ones,
4-plexes, 8-plexes,
10,
12,
32, or maybe under 100 units, probably a significant portion.
Yeah, so is that the kind of deal you found or was there debt on it? And then you were getting creative with the equity?
Seller had it paid off on that one.
Walk us through that transaction.
Okay, so seller, here's what happens with these small mom and pop investors. Okay, so what they do is this particular seller owned corner stores, right? Grocery stores. So he's making a bunch of money. His CPA is like, yo, dude, you got too much of a tax liability. We need to get you into real estate and get you a full-time exemption for real estate. We need to get you depreciation. We need to get you all these things. He's like, okay, I'm not a real estate investor, but I'll just start dumping money into real estate, multifamily. So he starts buying assets. 20 years later, he's sucked out all the cash flow out of these. He's not fixed a single roof. They haven't upgraded any of the units. And they're like, okay, we're ready to sell these. Okay. Problem is now you're leaving all this pile of junk for somebody else. And so the numbers that they want to sell at are unattainable.